Welcome to our YouTube channel, Moneyline with Nancy TV. This is where you get the latest updates on business, finance, economy, market, as well as investment information. If you couldn't follow us live on television, please do subscribe to our YouTube channel. Also, press the notification bell so that you can get notifications. Thank you. Enjoy this video. All right, welcome back to the program. My first guest is joining me right now. She's Dr. Bala Keffi, MNI. She's the Acting Director at Monetary Policy Department of the Central Bank of Nigeria. Dr. Keffi, welcome to the program. Now, let's get started. Six MPC meetings this year, 6 rate hikes. Yeah. As we get into 2025, should we breathe a sigh of relief? Would we breathe a sigh of relief of rate hikes?
Oh. Well, that's a tough question, Nancy. If you breathe a sigh of relief from rate hikes, that will largely depend on the numbers in front of us. That would largely depend on the trend of the inflation, if it goes up or down. So, as I have said in your show several times, decisions are taken based on empirical evidence in front of us, based on the data that we have gathered, both from the monetary sector as well as from the National Bureau of Statistics. So before the MPC takes a decision, they look at the 4 sectors of the economy, the whole macroeconomic space, with availability of data, and that's what informs decision taking.
If we take a look at the MPC in 2024, I think now perhaps if we add the 25 basis points that was just raised, perhaps it's about 875 basis points increase this year.
Yes.
That's a lot. That's 8.75%. I listened to Governor Cardoso on why the MPC was raised. Of course, inflation is still being targeted. But if you take a look at even the trend this year, do you think that the MPC has really done well? I know that's your job anyway, because, has really done well in terms of targeting and addressing inflation, which is not monetarily induced, as it were.
So, we do a lot of simulation exercises. And in the course of doing that, we did a counterfactual. If we had not hiked rates the way that the MPC members had been doing, we would be heading towards hyperinflation. And I'm sure we've seen these in other countries such as Zimbabwe, Venezuela. We do not want Nigeria to become one of such countries with such kind of phenomena. So these rate hikes that we have taken, that's over 800, and yes, they do make an impact, because they have played it. These hikes have played a role in reducing, limiting the acceleration of inflation.
So if you didn't increase rate hikes by 8.75% this year, are you saying that perhaps inflation would have gotten to around like 40%?
Oh yes, 48. In fact, in one of the scenario analysis we did. For this last one, we did different scenarios. If we do CRR plus MPR, what would it give us? If we do MPR alone, what would it give us? So it's based on multiple data analysis with scenario analysis, looking at different sectors of the economy. And that's what drives the informed policy decision making.
Did the global development even play a part in the scenario planning as well as the eventual decision making? And I know I'm asking this question because over in Washington, was it in October meetings, annual meetings, I did specifically ask Governor Cardoso that question, and he also had his counterpart, Minister of Finance, close by, in terms of, we're seeing global central banks now,
easing.
Yes, easing. In Africa, a few African countries are beginning to ease, but Nigeria, we're seeing accelerating inflation as well as rate hikes. So did global decisions even take, did you even think about that when the MPC was even thinking about raising rates again as to the easing of inflation, which as to the easing of rates in developed countries, because that will also have an impact in Africa.
So Nigeria Nigeria is part of the global economy. We're not, we're integrated into the global economy. We're emerging market. We are an emerging market economy. So the dynamics in their economies will be different from ours. However, whatever happens in the global space would have an impact on Nigeria because we export commodities and we import refined products. We also have our reserves in a portion of the dollar. So all these things culminate into things that would make our banks have branches all over the world. They have gotten lines of credit from other banks all over the world. So I will tell you quickly that we should not compare what the developed economies are doing, because some people are saying developed economies are cutting rates and we are hiking. So I'll tell you quickly, the Fed hiked rates for 17 months until they got to a comfortable level before they started lowering rates. Likewise, the ECB cut rates for about 15 months before they started easing. And the Bank of England for 21 months. If you know, I know you are a journalist, you're in that space, so you must have been following the developments in these economies. The UK economy was almost going into recession. So they were cutting rates to boost economic activities. And that's what we're doing now. We need to keep an eye on inflation. Inflation is a monster. It's a beast. Once you allow it to go out of the space where you want it, it develops, it becomes an octopus, and it's very difficult. It perpetuates, it's self-perpetuating, and it will be very difficult for you to rein it in. And then another reason, again, why we raised the MPC raised rates, despite the fact that advanced economies are lowering rates. We're in a very competitive space with other emerging market economies in Asia as well as in Africa. For example, we have Kenya, we have Egypt, we have South Africa, we have Ghana. They are all playing in the same space that we are. So if we raise our rates, we hike rates, another angle is, well, trying to attract inflows. And we have done tremendously well in that regard in the last 1 year since Governor Cardoso took over. Before they took over, there was a period of stagnation. We were not getting inflows at all. But I can tell you for free that as at October, end of October, and even going into November, we had like over 8 billion of inflows, dollars, into the economy, largely due to the aggressive drive of the management of the bank. And out of that 8 billion, 5 billion was due to the efforts of the Central Bank of Nigeria, the management. We were in DC, they did town hall meetings, we held meetings with the diaspora, trying to build that credibility and trust for them to believe in the Nigerian economy, for them to believe in the Central Bank of Nigeria, that they should bring in their money rather than keeping it elsewhere. And we're getting results. Our reserves is over 40 billion, was over 40 billion. I didn't check the figure today, but in this November we got over 40 billion, and we are still counting. We're expecting more.
Okay, just as we begin to round up, I don't want to say I know the answer to the question, but I also need to ask, because from your rate hikes through this year, would monetary policy curb inflation? I know it is the mandate of the central bank. Then the second one is the outlook for 2025. Okay. Outlook for inflation, because we just have a few days to the end of the year.
Yeah. So yes, the general theory is that inflation is a monetary phenomenon. However,
general theory, but it's not. They work.
Yes.
For Nigeria.
So, because if
inflation here now is structural.
Yes, because if you have an economy where the system is near perfect, like the advanced economies, we can say it is a monetary phenomenon.
So does that mean that monetary rate hikes is wrong? Is a wrong approach to tackling Nigeria's inflation?
Okay, no, it's not a wrong approach. So even in advanced economies where you're using tools,
or you just have to do because you're central bank.
Yes, you must use your monetary policy tools to address inflationary pressures. And the tools that are available to the central bank are limited. That's why this issue of fiscal and monetary policy coordination is very important. And this is not just a Nigerian thing, it's a global thing. Fiscal and monetary policy coordination is very critical. And I must say that we are working closely with the fiscal authorities. They are playing their role, and also the federal government. Banditry and conflict in the Northeast has reduced, and that's where food is predominantly produced. And food forms a huge percentage of the basket of the inflation basket. So once we get that, these are the structural issues. There's also climate change is also affecting production of food. There's also something critical that happened that led to this, added significantly to the inflationary pressure, is the PMS price. That is a big challenge for us. If that can be stabilized, we know that these inflationary pressures will be lowered. And I must add quickly something I forgot to mention when I was speaking earlier about global development. We can see that in the US, there was an election, and there was an emergence of a new president. And we know his outlook towards multilateralism is different. There's likely to be tax cuts. So once the US economy picks up, it's going to have negative impact on other economies because trade is largely denominated in the US dollar. So we have multiple issues that we are trying to address at the same time.
So it depends on what the Trump effect would be come January, and the next MPC would be in January. So the outlook for 2025?
The outlook is largely positive, and we are saying that because the impact of our tightening, you know, it's not a switch, light switch that you tighten and you put on, inflation comes down. You put on the light switch, no. It takes a lag period of about 150 days from the studies that we did in the bank. That's 3 to 6 months. And we hope that the lag effect, what we're seeing is that we will have a positive outlook. Inflation will likely decelerate. That is our hope. That is, if we don't get any surprises, no flood, no excess injection of cash
Money
into the
fiscal
system. Yes. So hold all things constant, our outlook is positive. In addition, the expected stability in the exchange rate, which we have witnessed relative stability due to our multiple interventions. The CBN has been intervening in the foreign exchange market to stabilize the rates. And we can see from what we're seeing, it may be baby steps, but we're seeing results gradually picking up. In addition also, the deregulation of the oil sector, we hope with the Port Harcourt refinery is a good news for us. Likewise, the Dangote refinery. And we can even see also in our balance of payment, we've been recording surplus consecutively for 3 months. And in addition, GDP actually is growing. It's not decelerating. Yes.
Okay. Dr. Keffi, that's a discussion for another day. GDP is growing, but we need to grow more than 3.46% than it is doing right now. But I want to say many thanks for joining us today on the program. I hope to see you in January.
Yes.
By God's grace, we'll all be here again. That will be the first meeting of 2025.
So if you allow me to just say some parting words.
Okay. Just a few seconds.
Yes. We would like to reassure all stakeholders, from market women to children, youth, up to firms and investors, that the central bank is staying on its course of ensuring price stability using orthodox monetary policy tools. The central bank management, as well as the MPC team, are aware of the sufferings of the Nigerian citizens, are aware of what's happening in the economy, and that is one of the reasons why the hike was considered to be a bit dovish by analysts. So we are reassuring the public that we are on the right course. They should have faith in the MPC members, in the management of the central bank, and the horizon is bright.
Okay. So on that note, I need not to say more. Let's take a quick break, and when we come back, I will be chatting with Tosi Oshikoya, who is the Chief Executive Officer at Commercio Partners. We'll be looking at rate hikes, inflation, and investment trend. I've been speaking with Dr. Bala Keffi, MNI, the Acting Director of Monetary Policy Department at the Central Bank. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to the YouTube channel, drop your comments as well as like, and most of all, share our content. Bye.